into one pill.
Good morning and welcome to BloombergQuint. I'm Niraj Shah and this is the day's trade setup. And the world markets, well, you would have to say it's a bit of a mixed bag, though more red than green. This is what a few charts that I want to bring up are suggesting. Now, this is the one which says that the overall conditions may persist, because if you look at the global stocks, the relative strength index, and compare it to the global financial crisis levels, we are on the RSI front at around these levels, and during the GFC they dipped down to levels below the current levels on the RSI. So maybe there is some more room to go. In fact, if you look at what Goldman Sachs is predicting for the SPX, which is the S&P 500, that chart suggests that there's some more downside to that index as well. And frankly, if you look at what's happened over the last few days on the world markets as well, and specific currencies and specific commodities too, everything seems to be falling down. Yesterday was a bad day for trade across. So while the US markets did what they did, the clutch of other asset classes also corrected. So bring up gold, bring up Bitcoin, bring up crude, almost everything fell. This is the 3-day chart. This is, look at the correction that happened in gold, look at that crude, look at the correction that happened in gold as well, and then look at the correction that happened in Bitcoin too. This is Bitcoin, of course, and then of course gold will come up on the screen as well. And all of these corrected quite strongly in trade yesterday. So all asset classes came down as a pack, and that wasn't the best of news for world markets. Now, the key is, if you look at what the US markets did yesterday versus what Asia is doing right now, you will see that slight bit of divergence, though I think that has also gotten corrected. Asian screen is now awash with red. Some of those pockets were in the green. SGX Nifty futures, for example, were trading with a bit of green, maybe in part because we corrected 8% yesterday, but maybe in part also because the US futures, unlike what happened in trade yesterday, were indicating some bit of an upside. So this was the worst fall for the US markets in trade yesterday since 1987, but the US futures were trading with a bit of a green, and that is why maybe, just maybe, the Asian screen is not deep in the red and the SGX Nifty was trading with a bit of green on the screen today. Now, therefore, what comes to mind is what to do in a scenario like this. What is it that you should be watching out for in the session today? Keep in mind, don't be in a hurry. I think everybody said that, and when you hear Manish Chokhani today on the platform, he'll be played. His interview will be played out at 10:30 a.m. today. You will hear what he's saying as well. Just look at the different periods for which the crisis lasted. This is the first global tweet wherein they are mentioning that how the Asian crisis lasted for approximately 2 years. The dot-com crisis approximated 3 years. The global financial crisis lasted for a period of 1.5 years. We are at best 2.5, 3 months into this bear market, and not even that much. And therefore, would it be prudent to be in a rush to do or deploy money? Maybe not. Maybe, as Manish Chokhani mentioned, sharpen your pencils. Don't quite start writing on the paper just as yet. So that's the advice that came in. Now, amidst all of this, what to do with specific companies, what should one watch out for? Well, there are a couple of names that I think are important today, and therefore bringing them out. So firstly, Yes Bank. Moody's has upgraded Yes Bank from CAA3 to CAA1. Remember, that stock was a rank outperformer in trade yesterday, I guess across world markets maybe. The upgrade is on account of a bailout to banks, depositors, and the senior creditors. Of course, I'm sure, as would be the case with any upgrade or downgrade, a lot of conditions need to be watched out for, and they, of course, expect the bank's solvency to improve. So all of these things lead to some improvement from a Yes Bank outlook perspective from a rating agency, which is also very, very important. Not to say that the stock will have another rally like the way it did yesterday. It's very difficult to predict what Yes Bank could do, frankly, because a lot of technical indicators, including the stoppage of selling as well. But let's wait and watch. It's an important stock to monitor in the session today. I would watch out, though, for some of these companies which have started to get impacted. PVR yesterday, ignore this because the futures were still down. So this may be a fat finger syndrome or something else. But remember, we've had these stocks correcting, but the number of COVID-19 cases rising in India would mean that the lockdowns that are starting to be put into place might not end in a hurry, and therefore the earnings impact might continue. And therefore, maybe, just maybe, these stocks might have some more time pain, if not price pain, to go. So to watch out for exhibition stocks, watch out for malls, watch out for airlines, watch out for restaurants. All of these could remain under a bit of cloud. And speaking of airlines, just watch out for this CAPA, which is that analyst body says that the coronavirus pandemic will bankrupt most airlines worldwide by the end of May unless governments and the industry take coordinated steps. This is a dire statement coming in. As much as we want to wish away airlines, right now it's something that we depend on daily, and therefore this is a very important thing that CAPA has said, and it'll be important to see how do airlines scope and how do government step in to help this beleaguered sector in these dire times. But that's the trade setup for the day. Remember, we may start off marginally high for the SGX Nifty. Doesn't quite mean that will be the trend of the day, but the US futures were pointing towards the green at the time when we recorded this. So let's wait and watch how the day shapes up. Thanks so much for tuning into this trade setup.
According to a recent report, women today contribute nearly 74% of real estate buying decisions. This includes 32% of single women buyers across the top 8 cities. And finally, women are not just buying homes to live in, they're also investing in real estate.
I think real estate definitely is the step above jewelry.
So it's my personal endeavor that Puravankara and Provident are the first choice or the first place women home buyers come to buy a home.
I think it's that feeling of kind of apna ghar.
How many places can you be at once? What if we said 9? BloombergQuint Live. We are everywhere.